and welcome to this week's look back at the major stories that have affected the markets in the last few days. We haven't done one of these for a couple of weeks due to holidays, etc., but plenty to get our teeth stuck into this week. And we're going to start with crypto, and we're going to start with a statement that crypto has hit rock bottom. Analysts at JP Morgan concluded that the cryptocurrency market is forming an important bottom, driven primarily by two factors. The first factor they state is the bankruptcy of Terra and the Luna token back in May of this year, and the fact that actually it didn't have as much negative impact on the market as pretty much everybody thought it would do. So they're building a little bit of positivity into that. Now, secondly is the Ethereum network update. Now, tests run back in June were highly successful by all accounts. So the Ethereum merge update that everybody's expecting in September should not bring any major problems. On top of that, according to crypto research firm Masari, the downturn in cryptocurrency markets currently is being used to invest in new products. And in fact, in 2022 so far, $30 billion has been raised for new products. That's compared, and in fact more than, the whole amount raised during 2021. Is this all correct? Well, the charts don't quite seem to back up JP Morgan's viewpoint. Now they're showing some real lows in terms of buying activity around the $25,000 mark. And we've seen the Bitcoin market come back off that since testing that 25,000. Now, if we don't see a decent bounce, it's pretty clear that we may well see an attack back on the $20,000 mark. Now, there's a lot of information out there. And JP Morgan are saying, well, we think it's the bottom. That's in distinct and direct contrast to Peter Schiff, the radio host, CEO Capital, who's actually tweeted recently that he is predicting Bitcoin to collapse. So contradictory views out there. Do your own analysis, particularly in volatile markets such as crypto. Wish you luck with it. Okay, secondly, we're going to have a look at Europe and the fact that Europe's issues are visible to the whole world. None of this is going to come as much of a surprise. We've been talking about similar issues to this for the past few months. But what we have seen is Eurodollar falling below parity. Now, this is quite a bold move and is pretty much being driven, most analysts accept, by the energy crisis. Germany has turned around and said it can't abandon liquid natural gas, swapping it straight for green energy. But deliveries from Russia are massively in question. Nord Stream pipeline is going to be closed for maintenance again very soon. And we all know about the geopolitical concerns going on and the fact that Russia is often threatened just to turn off the supply of said gas. Gas prices in the EU rose by 13% in just 24 hours. They've doubled in just 1 month and are currently around 14 times the average price over the last decade. This, and a lot of analysts suggest, means that the peak of inflation is yet to reach us in the EU and in the UK. That has seen the euro perform pretty poorly against the US dollar. There's no doubt about it. But also it's worth noting that the Aussie dollar's performed pretty well against the euro as well, along with a lot of other currencies. A lot is going to depend on what happens in the coming months in terms of energy crisis, which I'll come on to in a moment, talking about the UK. But again, it's certainly one to keep your eye on, and can't really see much potential upside for the euro as things stand currently. Okay, now we've already mentioned energy and the energy crisis, gas supplies to places such as Germany. We also can't ignore or avoid the oil market. Is oil slowing its decline? June of this year, the price of an oil futures contract fell by 8%. In July, it fell by just over 7%. In August, though, we've seen it down about 4%, but the last few days, there's been a bit of bullishness about the market, a little bit of buying going on. So what's causing this? What is causing this slowdown in the decline, or even potentially the bottom of the decline? Well, one of the biggest drivers has been the OPEC plus producing countries. They've released a statement. They would basically not allow the price of a barrel of oil to fall too sharply. They're talking about tightening supply levels. They're talking about controlling more the supply of the raw materials for oil. Now, that isn't a massive surprise, of course. They're more than interested in keeping, the price of an barrel of oil pretty high. But it's quite a big statement coming from them, along with remarks such as it's no longer driven by supply and demand, other factors are taking over, which they feel they need to take back control of. We've also got, as mentioned, the energy crisis in Europe. Now, there's no doubt about it, gas has been going up massively. In the previous little section there, we talked about some of the rises that we've seen. But the energy crisis, the fear of what's going to happen this winter, and the increase in gas prices is dragging oil along with it. To throw a different view in there, if we look at it from a technical aspect, oil, the price of a futures contract of oil is in fact near the lower boundary of the long-term ascending channel, which would always suggest some sort of support for the price. So adding all of these factors together, do you think we may be seeing a slowing decline of oil, or do you think we may in fact be seeing a bottom of that decline in the oil price? We'll have to keep an eye on markets to see. Now, from talking about a market that maybe will be seeing a slowdown in its decline, unfortunately, there's more gloom in store for the Great British Pound. It's been a bad few days. I don't think anybody can avoid that. Citigroup predicted UK inflation could hit 18% by January 2023. Monday, we saw cable, GBP against the US dollar, hit 118. Confidence is clearly low in sterling. There's no doubt about it. In fact, yesterday, JP Morgan, them again, from our earlier talk about cryptos, said if a domestic energy crisis does occur this winter in the United Kingdom, and if you were in the United Kingdom reading the press, that's pretty much a surety, according to the press here, where the average energy bill could top £5,000 a year for the average household. That's huge increases from where we were just 12 months ago. They have said if this does occur, if this energy crisis continues, if we see some major issues over the winter, they expect GBP may reach 114 against the US dollar. So far this year, we've already seen GBP fall 12% against the US dollar. With guys coming out and talking about 114, it's certainly not a rosy future by the looks of it for the Great British Pound. Many thanks and good luck with your trading in the week ahead.